Today we are covering the 21 most tricky record to report journal entries. These are the most practical scenarios which you will face in your day-to-day life. After getting hired in record to report profile, you have to understand the situation and what kind of journal entry treatment is required. So make sure you listen carefully and take the full benefit, and I am sure make you feel more confident, not just for your interview but also for your journey after joining the company. So without any further ado, let's get started. I'm going to ask you some journal entry questions that are commonly used in record to report processes. These questions will test your understanding of accounting principles and practical application. Are you ready to begin?
Yes, I am ready. Thank you for this opportunity.
Great. Let's start with our first question. Company accrues audit fees of rupees 40,000 for the month. Invoice will come next month.
Okay, so this is about accruing expenses that have been incurred but not yet invoiced. Let me think. The journal entry would be debit audit fees expense for rupees 40,000 and credit accrued audit fees or audit fees payable for rupees 40,000. This follows the matching principle where we recognize the expense in the period it relates to, even though we haven't received the invoice yet.
Good. Now let's move to the next question. Pass the reversing journal entry for the audit fee provision created last month of rupees 40,000, which is no longer needed.
Right? So this is about reversing a provision. When we reverse a provision, we essentially do the opposite of what we did when we created it. So the entry would be debit accrued audit fees for rupees 40,000 and credit audit fees expense for rupees 40,000. This removes the liability from our books and also reduces the expense.
Excellent. Here's the third question. Rent expense of rupees 1,20,000 is prepaid for 6 months. What is the journal entry at the time of payment and month-end adjustment?
This is about prepaid expenses. Let me break this down into two parts. At the time of payment, we would debit prepaid rent for rupees 1,20,000 and credit cash or bank for rupees 1,20,000. Then for the month end adjustment, thus we need to recognize 1 month's expense. So that would be 1,20,000 divided by 6 months, which is 20,000 per month. So we would debit rent expense for 20,000 and credit prepaid rent for 20,000.
Very good understanding. Now pass the year-end journal entry to transfer the net profit of rupees 3,50,000 to retained earnings.
This is typically done during the closing process. The entry would be debit profit and loss account for rupees 3,50,000 and credit retained earnings for rupees 3,50,000. This transfers the net profit to the retained earnings account, which accumulates the company's profits over the years.
Perfect. Let's continue. Provision for doubtful debts at 5% on closing debtors of rupees 4 lakh. Pass the journal entry.
Okay, so we need to calculate the provision first. 5% of 4 lakh would be 20,000. The journal entry would be debit bad debts expense or provision for doubtful debts expense for 20,000 and credit provision for doubtful debts for 20,000. This creates a contra asset account that reduces the net value of our accounts receivable.
Good calculation. Now pass the journal entry for unrealized foreign exchange gain of rupees 6,000 on receivables at month end.
This relates to foreign currency translation. When we have foreign currency receivables and the exchange rate moves in our favor, we get an unrealized gain. The entry would be debit accounts receivable for 6,000 and credit foreign exchange gain for 6,000. This reflects the increased value of our receivables due to favorable exchange rate movement.
Here's a reclassification question. Reclassify rupees 50,000 wrongly booked under office expenses to information technology expenses. Pass the reclassification entry.
This is about correcting a misclassification. The entry would be debit information technology expenses for 50,000 and credit office expenses for 50,000. This moves the amount from the wrong expense account to the correct one without affecting the total expenses.
Right? Now pass journal entry for income tax provision of rupees 2 lakh created at year end.
This is for tax provisioning. The entry would be debit income tax expense for 2 lakh and credit income tax payable or tax provision for 2 lakh. This recognizes the tax liability that the company owes based on its taxable income for the year.
Good. Here's an interesting one. You find a suspense account balance of rupees 25,000. Investigation reveals It was a salary payment. What is the correcting journal entry?
This is about clearing suspense accounts. Since the investigation shows it was a salary payment, the correcting entry would be debit salary expense for 25,000 and credit suspense account for 25,000. This properly classifies the payment and clears the suspense account balance.
Now, a fixed asset worth 1 lakh rupees is sold for 1,20,000 rupees. Accumulated depreciation till date is 60,000. Pass the disposal journal entry.
This is about asset disposal. Let me work through this step by step. First, I need to calculate the book value. Original cost 1 lakh minus accumulated depreciation 60,000 equals book value of 40,000. Sale price is 1,20,000. So the gain is 1,20,000 minus 40,000 equals 80,000 gain. The entry would be debit cash for 1,20,000, debit accumulated depreciation for 60,000, credit fixed asset for 1 lakh, and credit gain on sale of asset for 80,000.
Very detailed calculation. Well done. Now pass a recurring journal entry to amortize software expenses of 60,000 over 12 months.
This is about amortization. The monthly amortization would be 60,000 divided by 12 months, which is 5,000 per month. The recurring entry would be debit software amortization expense for 5,000 and credit accumulated amortization of software for 5,000. This entry would be posted every month for 12 months.
Interest income of rupees 8,000 is accrued but not received. Pass the journal entry.
This is similar to the audit fees, accrual, but for income. The entry would be debit interest receivable or accrued interest for 8,000 and credit interest income for 8,000. This recognizes the income earned even though cash hasn't been received yet.
Good. Now, provision of rupees 30,000 created for utility bills at month end. Next month, the actual bill is 28,500. Pass adjustment entries.
This involves both the original provision and the adjustment. When the actual bill comes, we would first reverse the provision by debiting utility bills payable for 30,000 and crediting utilities expense for 30,000. Then we record the actual bill by debiting utilities expense for 28,500 and crediting accounts payable for 28,500. The net effect is a reduction in expense of 1,500.
Let me think about that approach. Could there be a simpler way to handle this?
Oh, you're right. Actually, a simpler approach would be to adjust the provision directly. We could debit utilities expense for 28,500, debit utility bills payable for 30,000, and credit accounts payable for 28,500, and credit utilities expense for 1,500. Actually, let me reconsider. The simplest way would be to debit the provision account for 30,000, credit utilities expense for 1,500, and credit accounts payable for 28,500.
That's better thinking. Now pass the journal entry to reverse unutilized provision for bonus of 70,000.
When we reverse an unutilized provision, we're essentially saying we no longer need that liability. The entry would be debit bonus provision or bonus payable for 70,000 and credit bonus expense for 70,000. This removes both the liability and reduces the expense.
Correct. Transfer balance from clearing account to respective expense account after reconciliation. For example, 25,000 from general receipts invoice receipt clearing to freight inward.
This is about clearing reconciliation. The entry would be debit freight inward for 25,000 and credit general receipt invoice. Receipt clearing for 25,000. This properly classifies the expense after the reconciliation process is complete.
Good. Intercompany expense of 1,50,000 needs to be booked for services received from group company A. Pass the journal entry.
The entry would be debit the relevant service expense account for 1,50,000 and credit intercompany payables or due to group company A for 1,50,000. This records both the expense and the liability to the related company.
Perfect. Record the entry for bank charges of 2,500 as per bank reconciliation.
Bank charges identified during reconciliation. The entry would be debit bank charges expense for 2,500 and credit bank account for 2,500. This records the expense and reduces our bank balance accordingly.
Right? Pass the journal entry to write off an old balance of 18,000 in other current liabilities after confirmation.
When we write off confirmed old balances, the entry would be debit other current liabilities for 18,000 and credit. This depends on the nature of the liability. If it's confirmed as no longer payable, it would be credit miscellaneous income or other income for 18,000.
Now you received an interest invoice from your parent company for 10,000. Pass the intercompany payable entry.
This is an intercompany transaction for interest. The entry would be debit interest expense for 10,000 and credit intercompany payables or due to parent company for 10,000. This records the interest cost and the liability to the parent company.
Excellent. Pass a journal entry for deferred revenue adjustment. 1,20,000 received in advance for annual subscription. Recognize 10,000 monthly.
This is about deferred revenue recognition. When we initially received the advance, we would have credited deferred revenue. Now, for monthly recognition, the entry would be debit deferred revenue for 10,000 and credit subscription revenue for 10,000. This recognizes 1 month's worth of the annual subscription.
Perfect. Pass the journal entry for recording month-end provision for telephone expenses of 8,000 where the invoice is not yet received.
This is similar to our first accrual question. The entry would be debit telephone expenses for 8,000 and credit accrued telephone expenses or telephone expenses payable for 8,000. This ensures we recognize the expense in the correct period, even though the invoice hasn't arrived yet.
Excellent work. You've demonstrated a strong understanding of journal entries across various scenarios, including accruals, reversals, provisions, intercompany transactions, and asset disposals.
Thank you. This was really comprehensive. I feel more confident about handling these types of entries now.
That's all for today's video. Get the ebooks and notes from my website corporatewala.in, link in the description, and subscribe for more such videos.